Welcome to Kaiser Watch with John Kaiser. I'm your host, Jim Goddard. John, what's coming up on the show today?
Well, Jim, we're going to talk about the Allkem-Livent merger that was just announced, the Faraday Copper PEA for its Copper Creek project, and the status of Solitario's Golden Crest permitting activities.
So what are the implications of the proposed Allkem-Livent merger for the James Bay region?
Jim, I think this is an extremely positive development for the James Bay region. On May 10th, Allkem-Livent announced a merger of equals whereby the Livent shareholders will get 2.406 Allkem shares, and the resulting company will end up trading on the New York Stock Exchange and the ASX. The TSX listing will disappear. The combined company, based on where they were before the announcement, has a $10.6 billion U.S. value, and it's risen since then. And both companies have actually risen in price as a result of this merger announcement. Pro forma revenues for last year would be $1.9 billion, and EBITDA would be $1.2 billion. So this merger combines the Argentine brine operations of both companies, the Australian Mount Cattlin pegmatite mine of Allkem, and it brings into one portfolio, into one company, the Quebec-based James Bay project of Allkem and the 50% owned Nemaska project of Livent. And to me, it is the James Bay and the Nemaska Wabuchi project which are critical to this merger, because this is where the synergies reside in. Now, the Nemaska project was part of Lithium Mania 1.0. It was a Canadian-listed company called Nemaska Lithium, which was building this project. And then when the lithium carbonate prices crashed below $5, the company just ran out of money and ended up in bankruptcy in December 2019. Now, in October 2020, a consortium consisting of Orion Mine Finance and the Pallinghurst Group acquired 50% of the project, and a government agency called Investment Quebec acquired the other half. Livent showed up on December 1st, 2020, when it acquired part of the private group's stake, and on June 6th of 2022, it issued 17.5 million shares to cover to acquire the other 25%, to end up holding 50%, with IQ, the government agency, owning the other 50%. Livent itself, which used to be a public lithium company a long time ago, was acquired in 1985 or so by FMC Corporation, was spun out through an IPO on the New York Stock Exchange in 2018, and it held the Hombre Muerto brine project in Argentina. Now, Allkem itself, its origin is 2007 as Oro Cobre, and it put the Olores brine project into production. And this is also located in Argentina, was accomplished in 2015. It diversified into pegmatite in August 2021 when it acquired Galaxy Resources, which was an ASX-listed company that had been around a long time, but had branched into pegmatite lithium well before all the 2015, 2018 Lithium Mania 1.0 kicked off, and it put the Mount Cattlin deposit into production in 2010. Now, it in 2012 acquired Paul Matizik's Lithium 1, which owned the Vida brine project in Argentina and the CYR pegmatite project in the James Bay region. And the CYR project is what's now called the James Bay project of Allkem. After Allkem acquired the Galaxy in August 2021, it quite quickly published a feasibility study for putting the James Bay project into production. And last week, we got a press release from Allkem that provided quite a bit more detail than it had in the past about the James Bay project. And one of the interesting things about this was it spelled out in detail the so-called northwest sector, which is sort of the CYR deposit has kind of a northwest, west, south, east trend, and that's on which the proven and probable reserve was built or developed through delineation drilling, but it jogs much more sharply towards the northwest, and it's all under overburden, and they've extended it at least 500 meters. And what's really interesting, we talked about this the prior week, is that the grades came in at 1.5% to 2% lithium oxide, compared to sort of the 1.3% grade of the proven and probable reserve. And the Allkem that indicated it had done an awful lot of drilling, extending the system to the east, right up to the Anataka west boundary of Brunswick, but it didn't provide any details of what was encountered there. But all of this is going into an updated resource estimate, and Brunswick itself extended the system at least 300 meters onto its property and encountered similar looking pegmatite dikes on Echelon series. They're very similar, and they are awaiting assays for that. But the really significant development or implication from last week, which we discussed, is that all the historical exploration in the southern half of the James Bay region was based on pegmatites that very overtly stuck out of the ground. They outcropped to the extent where you can even see them by scanning the area with Google Earth. And they were found 30 to 50 years ago, and that includes the CYR, the Rose deposit of critical elements, and the Whabouchi project, which Livent and the government ended up owning after Nemaska went bankrupt. And all this past exploration has been pretty laser focused on what was sticking out of the ground. And the general view has been that, well, if it was any good, it was sticking out of the ground, and that's all there is. So that first order of exploration, where you simply walk the ground, find the pegmatites, check to see if they are lithium enriched, and then check its dimensions to see if it's large enough to bother with. That has been pretty much done in the southern half. The first order exploration glamour is now in the northern half of the James Bay, and that means going north of the Eleanor mine, and that's where you find Patriot Battery Metals Corvette trend. That's where the big staking rush is. That area, they did observe pegmatite in the past, but because of the remoteness, nothing serious was ever done with it. Last year, or even in 2021, Patriot Batteries finally started drilling the Corvette system, and it's now becoming clear that those trends in the northern half are running 1.5% to 2% lithium oxide. And what we can see from the CV5 pegmatite of Patriot Battery Metals, there's a footprint there of 50 to 100 million tons of 1.5 to 2% lithium oxide, and that's comparable to some of these big Australian ones that were delineated in 2015 and beyond, and that are now commanding values in the sort of $4 to $6 billion range. So first order exploration this summer. Everybody's putting the boots on the ground. They're going to be looking, prospecting for these pegmatites, assessing how big they are, and setting those companies up there for a fall, spring drilling program if possible, but definitely a Q1 2024 drilling program. In the southern half, what's going on now is what I call second-order exploration. So they've already looked everywhere and seen what is clearly sticking out of the ground. But they're now realizing that what's clearly sticking out of the ground, that could just be due to a local topographical variation. And that's what the implication of the northwest sector is all about. It's better than the main body that was visible and obvious to be found and delineated. The same sort of situation exists with the Rose project of critical elements. They've done all the work on the Rose pegmatite itself, but there's an awfully large property that they have where second order exploration is justified. And by second order exploration, I mean you look at the lake bottom sediment data, you reconstruct the glacial history, and you do some deep thinking about the map geology and try and figure out, well, where could these evolved pegmatites have come? Where will they have ended up nestling? Like what sort of structural controls might they have ended up in? And you piece it all together. And there's companies like Dios Exploration, which have been very quietly doing this work under the radar, doing like solid geological work and staking claims, and they're sort of a nickel type company. And the market has sort of largely ignored this whole area. And Dios, the people behind Dios, Dios was once part of Sirius Resources. Dios was in fact spun out as a diamond exploration vehicle in the early 2000s. And what they had done was till sampling for indicator minerals after Ashton found the Renard kimberlite cluster. And in the course of this work, they picked up a train of what turned out to be led to the Pontax lithium dike system. And that's now owned by Cygnus Metals and Stria Lithium. And it's not really adequate as a system because the dikes are narrow and have a lot of space in between. So when you average it out, you don't have the sort of nice grades that you have at the CYR deposit. But it's an example of second-order exploration. It was made a couple decades ago when nobody really cared about lithium and is only being revived right now. So I think when you put together the Whabouchi and the James Bay projects of Allkem-Livent, and then consider that Livent is with the Quebec government agency developing the Bécancour hydroxide refinery, lithium hydroxide refinery on the St. Lawrence River, halfway between Montreal and Quebec City, where all the spodumene concentrates can be shipped and converted into the battery-grade material that North American developers or battery makers will need. This is an important development that they are now combining their operation. The whole sort of turnkey infrastructure is emerging. They are the potential aggregator of all these other projects. The northern half is going to take longer to delineate and develop and bring infrastructure in. The southern half, where there's second order exploration is taking place, that could end up attracting interest if companies doing sort of blind drilling on targets where they're not sticking out of the ground start intersecting significant pegmatites similar to the northwest sector. That's going to catch a lot of attention, I think, this year. And why is a stock like Dios Exploration trading at a nickel, even though it's doing all this work quietly, putting together a collection of projects based on solid archival research? Well, one reason is they don't want anybody to really know what they're doing until they're finished doing it. But the other is I just looked at their quarterly financials for March 31st. Their marketing budget collapsed 97.5% from the first quarter of 2022, from $81 to all of $2. And you wonder, what expense could that possibly have been? And I might suggest that if the CEO sits down with an analyst, brings out a bottle of $2 Chuck and goes through the presentation, that might just have done the trick. So when you have a marketing budget that small, that helps explain why the company is so off the radar and so cheap. Yet Dios Exploration may be the big surprise that emerges later this summer when they do come above the radar.
What's next for Faraday Copper following the release of its PEA?
The PEA was highly anticipated. The Copper Creek project has been around forever. It's a series of breccia bodies, copper mineralized breccia bodies in Arizona. Red Hawk Resources explored it during the 2000s, and it sort of crashed and burned. Copperbank, which is the predecessor of Faraday, it acquired Red Hawk, which had pretty much turned into a defunct company. And these breccia bodies, these are sort of not like your traditional porphyry system of disseminated copper mineralization, low to medium grade, where you have very large bodies. They tend to have more of a vertical control, and they can be quite high grade. And the focus in the past has been on the deeper zones, which are higher grade, of the Keel and the American Eagle. But there were also a number of breccias which are at surface. And these have now, what the PEA did was put together a complex series which shows them during the first 9 years of a 32-year mine life, mining open pits on the ones that outcrop at surface, while partly through that starting to drive the ramp down to begin in the 9th year mining the higher grade underground zones through block caving methods. Now, the PEA came out on May 3rd, and the market was not particularly pleased. It was expecting better. So they have 7 open pits feeding a 30,000 ton per day flotation plant, and the capex was US $798 million. But the headline after-tax net present value came in at $713 million, and they used 7%. And why did they use 7%? Well, $713 million is closer to $798 million than when you use 8%, and it collapses to $566 million. Why is this important? Well, there's a rule of thumb that you want the after-tax net present value to be at least as big as the capex. And so at the base case price of $3.80 a pound copper, well, they didn't make it. The internal rate of return came in at 15.6%, and 15% is pretty much the minimum that you want. So that wasn't particularly pleasing either. In terms of the silver and molybdenum byproduct base case prices, they use $20 an ounce for silver and $13 a pound for molybdenum. Both these numbers are lower than the current reality, but the silver byproduct is very small, so nobody cares. There's no optionality there. But they did indicate that if you use $23 a pound for molybdenum, that adds $129 million to the 7% NPV, which actually would make it 7%. That would clear that hurdle, that capex matches NPV hurdle. The current molybdenum oxide price is about $20.60 a pound, and it was as high as almost $40 in December, which would have matched the peak that was achieved back in 2005 when the first wave of moly mania kicked in. Now, the company did provide calculations, NPV and IRR figures for $4.25 a pound and $5 a pound. And with those prices, when you plug that into their mining model, you definitely hit all the NPV IRR development hurdles. So right now, the project is perceived as a copper optionality play. If you believe copper, the real price of copper is going up, then this stock, these results are very good because the PEA lays out the framework by which this complex mess of different zones can be developed, and you can see what happens when the price goes up. Now, is there reason to believe that the copper price, the real price, can go up? Well, the International Energy Agency projects that if the 2030 energy transition goals are to be met, there needs to be a 50% increase in the current global production of copper. And that sort of increase is not in the pipeline. And for it to happen, there has to be a higher real price. So in a sense, Faraday Copper, and they use the word Faraday because of its electricity connections, it's really a bet that the energy transition will not be torpedoed, that we will continue to see electric vehicle growth develop, and that copper supply will need to go up. And for it to go up, we will start seeing a higher copper price. right now the copper price is roughly where the base case price is. We're still waiting for it to do that big breakout. We have to navigate the debt ceiling situation right now, and also the impact of the high interest rate policy. But if you're looking at 2024 and beyond, the copper outlook is very positive. Now, what's Faraday going to go do in the meantime? Well, they did a webcast on May 4th, and in it, Paul Harbridge makes it very clear that this PEA is just a stepping stone. They've got 10,000 meters of drilling that's been done, for which they're awaiting assays. None of that has been incorporated into the PEA, and they did a big $40 million financing. Some of it they used to buy the Mercer Ranch so that they have all the surface rights in the area. So I think there's probably at least 25 million working capital left in the company, but they plan a 20,000 meter drill program starting in the fourth quarter. And this is to expand the resource. When they did their block caving studies on the Keel and American Eagle zones, they confirmed that block caving will work in this particular rock. In some settings, block caving does not work, but they saw that it's feasible to do from 30,000 tons per day up to 45,000 tons per day of block caving rate. So they decided on the 30,000 ton per day processing facility because both of those, the underground and open pit ore feeds, will go into that facility. It needs to be built in the beginning, but what they're going to be looking at is the possibility of scaling the initial processing capacity sooner. And if they can add more tonnage to preserve this 30-year mine life, they can increase the processing rate. This would mine the lower grade open pit ore sooner, and they would be able to get into the underground higher grade ore also a lot sooner. And the reason they're optimistic about the exploration potential, they've just done an EM survey that covers the whole property. That's done at a resolution never done before. They're planning a spectral survey. They've identified these two fault structures called Western and Holy Joe, which are very much related to the emplacement of these breccia bodies. And some of these breccia bodies, when you drill down into it, they reported an astonishing interval of 15 meters of 10.83% copper and 1.65 gram per ton gold. That's massive sulfide. That's not normally what you find in a copper porphyry system. And so they want to chase some of these things deeper, look for similar bodies, and see if they can grow the overall resource and perhaps even increase the grade. But one of the things they have noticed is that in some of the zones, gold is present, and gold has historically not been assayed for in this project. So they're going to be taking a closer look at the gold potential to see if it can be included in the resource as a recoverable metal. So what you get here is the optionality on a higher real copper price, dragging this into the money. You get the exploration potential over the next 6 to 12 months that could grow this bigger and perhaps even produce some unexpected surprises. And then you also, that's pretty much what you get is the optionality and the exploration potential. And I had hoped to improve this from a fair spec value rating on the basis of the PEA to a good spec value rating if it had met these hurdles. But that's obviously hasn't happened yet. So I'm keeping it as a fair spec value rated company in that $80 to $1 range. And if copper prices start to rise significantly, or we start seeing additional exploration discovery, then you'll see this stock reestablish an uptrend, and I see it as an essential copper play as part of the KRO 2023 favorites portfolio.
When can we expect Solitario to start drilling at Golden Crest?
Solitario announced on May 11th that the U.S. Forest Service has released a draft environmental assessment for a 25 drill site plan of operations at the Golden Crest project in South Dakota. Now, a 30-day comment period has begun, which ends on June 8th. And this is where every NIMBY person out there, anti-mining person, can go and weigh in and submit comments about this is no good, this is bad, this is harmful type of thing. The kind of comments that you can expect. Well, I remember when Rare Element and Newmont did this with their Bear Lodge project on the Wyoming side of the border. Some of the comments were concerns that well, if any blasting is ever done, it might cause George Washington's nose to break off of Mount Rushmore, and that's about sort of 80 kilometers to the southeast with lots of topography in between to dampen any blast sound. But those are the kinds of comments that you're going to get for this project. So the U.S. Forest Service will deal with these comments and write its responses. And then there is something called an objection period where these various parties that submitted these comments can object to the explanation or excuses that the U.S. Forest Service has come up with. And then the U.S. Forest Service has to review these again and then make it either ignore them or require some changes or simply approve it. So when I talked to Chris Harold, he says the earliest that we can now expect a drill permit is mid to late August. And that's 2 months later than when I had him at the Metals Investor Forum conference in Vancouver at the end of January. That's 2 months later than what he was expecting. Why is there this delay? Well, the problem is that the U.S. Forest Service got distracted by a huge controversy that erupted in the Pactola Reservoir area, and this is in the southern Black Hills. Golden Crest is in the northern Black Hills. It's basically to the west of the Homestake mining district. But farther south, there's very little mining. But some private company had applied to do drilling near this reservoir, which is also a recreational area and is a source of water for the city of Rapid City to the east. So this created a huge uproar that the U.S. Forest Service had to deal with. They stopped work on the Golden Crest application, and they finally dealt with the problem by creating a 20,000 hectare mineral withdrawal, basically centered on the reservoir. Kind of, okay, this is a no exploration, no future mining zone, and this is now eventually probably going to be approved. And the reason we finally got the EA done is the Forest Service went back to work, and it's a very frustrating thing because this was very close to being completed, but they just kind of dropped the ball and went into a panic dealing with this Pactola Reservoir problem. Now, is there a risk that the permit will not be granted? There's always that risk, but this is an area to the north where if you go to Google Earth and zoom down and do 3D, this is not particularly pretty country. It's more a plateau. The hills are actually to the east. It's called the Black Hills, but it's really a much flatter part. There's very little in terms of civilization. And what's interesting is this is potentially a mirror image of the whole Homestake Wharf mining district to the east, from which 90 million gold ounces have been identified, 2/3 of which have historically been mined during the past 100 years. And the only difference is that there's several hundred meters of younger carbonates sitting on top of the rocks that host the 60 million-year-old wharf mineralization and the 1.8 billion-year-old basement-hosted Homestake mineralization. This extra several hundred meters of rock sits on top of it. And what's interesting is when Solitario acquired this in 2020, it was based largely on a conceptual idea that the footprint of this system has to be much, much larger than what has been historically focused on. And when they got into the field, they were amazed. One, there's no evidence of prospect pits or anything like that. The historical archives indicate that only a couple holes were drilled. scout holes by Homestake, which for a long time controlled this area, which might explain why nothing was done on it. All that did was confirm the depth of the basement that hosts the Homestake deposit. But when they started doing surface work, prospecting and trenching, they're finding all sorts of gold mineralization at surface. And this is evidence of a major fluid system, probably the same age as that which created the wharf system, which is in a somewhat older stratigraphy that's beneath the ones they have here. But this system was powerful enough to push the gold-loaded juices all the way to the surface. They've done several years of prospecting work, identified all these targets. That's why they're eager to start drilling. They're going to be drilling right through the whole 400 to 500 meter thick sequence of stratigraphy into the basement. They have the additional potential that if there is a Homestake type banded iron formation deposit there in the basement, and it was exposed before all these younger sediments were created, there could be the same sort of placer fans that spread out from it. If they were to start finding evidence of placer gold at the unconformity between the basement and the younger sediments, that would signal that the basement also hosts these Homestake type systems. So this project is really the last gold frontier in America that isn't buried under hopeless cover that you can't really see through. How it was overlooked over the past 100 years, everybody who looks at the data and looks at the exploration history is just absolutely stunned that no work has ever been done. So hopefully we get this drill permit by the end of August. The exploration season is really May to the end of November. There's too much snow in this area for the winter. If they do get it by September, they could, Chris Harrell has said, well, they plan to put 2 rigs on this so they can get as much drilling done before they have to shut down for 5 months for the winter season. What else could go wrong other than the U.S. Forest Service not approving the drill permit? Well, the other thing that could go wrong is maybe there's a government shutdown or the U.S. Forest Service is not being paid anymore to work. How can that happen? Well, we have this debt ceiling fiasco to navigate through. So it's a bit touch and go. The good thing is this company is worth what it's trading at based on its 30% carried interest in the Florida Canyon zinc lead silver project in Peru, which Nexa is the operator on. So if you're frightened about the market, don't want to buy anything that's very speculative, this is the sort of stock to accumulate in this environment, because even if we get a bit of a storm over the next couple of months as a result of a market meltdown, this stock, it's already so low valued with a value already covered by the 30% carried interest. It will bounce back, and hopefully at least by next year, by next May, they have the permits in place guaranteed to be able to start drilling the last gold exploration frontier in America.
John, thank you so much for the update.
You're welcome, Jim.
I'm Jim Goddard. Comments made on Kaiser Watch are an expression of opinion only and should not be construed in any manner whatsoever as a recommendation to buy or sell any financial instrument at any time. Archived online at kaiserresearch.com.